Let's talk about that and more with Steve Sosnick, is chief strategist at Interactive Brokers. Did I set up that list well? Is that bonds or stocks and options?
Well, the list is actually by stock activity. The option activity can vary by the names. Also, in terms of the most buying activity, it's a little bit different because those were the most active overall. Actually, the one with the most net buying was Palantir, followed by CoreWeave, followed by NVIDIA, and then UNH. You can see a pattern there.
Okay, so we're showing most. So let's go back to the graphic. We have most active stocks. Number 2 is Palantir. That's active, but it was also the most bought.
Yes. So the most bought was Palantir. Next most bought was CoreWeave, which I think was number 7, stuff like that. So it's definitely, but the bottom line is the bigger the hit, the more they were coming in to buy it. And it was vindicated, let's say, into something like UNH, where they'd been buying steadily for months, and then Warren Buffett certainly joined the party, and that was very good. But some of these other ones, you do have to wonder when trying to buy a dip morphs into trying to catch a falling knife. It becomes a little tricky.
Okay. United Health, I think, that the old Sesame Street, one of these things just doesn't belong here.
Yeah.
United Health is different because that's been falling for 8-9 months. So let's kind of move them to the side for now. The other 9 of the 10, I think, Steve, to your point, it's still a buy the dip mentality for investors. Things go down, they come in to buy.
Very much so, and to a point where it's almost reflexive. And we could see, just if you look at the way we traded yesterday, we basically bounced like on cue at 11 o'clock in the morning. We were getting hit hard, 11 o'clock, selling stops. And if you look at some charts, it was right on the Bollinger Band for the NASDAQ. I don't want to get too into the technical stuff, but it was exactly where one might have predicted it would bounce if you're using that particular technical indicator. And so it's become very reflexive to people. It worked on an intraday basis yesterday. If you held overnight, not so much. But trading's all about timing.
Yeah, there's a professor at Princeton, Burton Malkiel. He was a professor. He wrote a book. Everybody, by the way, should read his book, A Random Walk Down Wall Street. Should be required reading. He actually had an op-ed today in the New York Times saying the stock market's getting a little bit scary. So, or maybe it was yesterday, but either way, it sounded like when you made your catch a falling knife comment, Steve, sounds like you might maybe not agree, but it doesn't also sound like you're not disagreeing.
I'm not disagreeing, and here's the problem. I've been asked a lot, is the bull market intact? And yes, I mean, the long-term trends have been in place for so long. It takes a lot to break a market like this. On the other hand, that doesn't mean they go up all the time, every single day, being led by the most speculative stocks. And that, to me, is a bit concerning. It's one thing if you're being led by which we had for much of it, being led by stocks that make a lot of money. But it's another thing entirely when in some cases they're highly speculative or have such extreme valuations that they're hard to maintain. I look at Walmart today, which is the class of the retail sector. On the other hand, they sport a 38 PE. There's no room for disappointment if you're that heavily valued, and that's where a lot of the risks come.
I'll tell you what, 38 PE would look pretty doggone nice on most of these tech companies.
Absolutely.
And I'm old enough, and I was actually reporting at the NASDAQ. I mean, it's embarrassing to admit this kind of, but like I was at the NASDAQ when it opened. I was the 98, 99. There was a lot of companies that made no profit, zero profit, and the stocks kept going up. You could make the bubble argument, but guess what? They probably kept going. They eventually crashed.
Yes.
But they went up a lot longer than a lot of people thought they would.
And in some ways, that's kind of the echo this week, which is one of the things that I think got a lot of institutional investors a bit off sides and why we're having a bit of a negative week. There was a report from MIT that says 95% of the companies, the end user companies that have been making AI investments, have yet to see any real material benefit from that. And that, in some ways, was what kind of brought the internet bubble to a bit of an end. A lot of it was, at the end, powered by the Y2K monetary impulse, and then they withdrew it, and that really brought it down. But in this case, for the next couple of years, people had to implement the internet. All the great promise of the internet, I will stipulate, came true.